Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 14th, 2020. Happy Valentine's Day, everyone. I am Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. You'll see right here that the ES remains in a very good uptrend here, not only on a medium-term basis, but a long-term basis as well. Short-term basis, we're in the short-term uptrend. We have the longer-term uptrend this way. Right, this thing's at kind of at a cycle high and could at some point, kind of similar to here, start to see some weakness. But at the same time, even if that were to be the case, this would be a great spot here to buy and continue this thing higher. Again, we haven't seen many pullbacks of that magnitude, but when they do occur, they have been occurring somewhere toward the end of the month and the beginning of the next month. So here's the end of the month here, beginning of the month. So, we're coming into that time zone where that could happen. But again, the market has been very, very bullish. Any pullback still a buying opportunity. Now, one thing to keep in mind at the moment is we're seeing a bit of a failed high developing with the overnight rejection of the high of the previous session. And now we're seeing an absorption signature that has developed off the 96.48s, and we're seeing price push down. If price pushes back as low as that midpoint and starts to push through it, we could begin to see an outside day develop. Very similar to this day here, where price pushes above the previous high, rejects it, and starts pushing through the mid, and ultimately ends up much, much lower. So that's very similar. So we're going to continue to watch this here because, again, if it gets too bearish and starts to push through that mid from the previous session, which is the 66.60s, that opens up much more weakness and a likely outside day, even if it's just for a brief period of time. Okay, let's take a look now at the NQ. Right now, NQ again, very bullish, very clear upward trending market. Not a good line. There's a much better line. You can see here hanging out near the upper end of this line, very similar to what we saw here recently. And then eventually it may see a pullback. Again, even if it's as deep as, say, 9,300, that could be the perfect spot to buy it and reverse it back up toward new highs. This thing is headed much higher and it hasn't really changed. Now, the one thing that is very clear right now is we have a very narrow 4-day range that is developed. If we bring this down to 4 days right here, you'll notice that measuring these 4 days, you're getting a compression signal right there. Obviously today, very early in the day, still much more day to go. But if this is the near-term high and we start to push through this midpoint, we'll likely drop down toward the previous lows and give 9,500 a test. And even if that were to happen, it would still be a narrow compression because you wouldn't really be expanding the range. So right now, we'll see how this plays out. But even if this does pull back into 9,500, that could be a great spot to watch for a trap and perhaps a bounce back up. Even if this were to pull back to 9,300, that's another spot to watch for a reversal as well. So this market remains very bullish and all pullbacks likely to be defended. All right, let's take a look here at crude oil. Now, crude oil has been one that I've been mentioning has a very big breakout likely coming. Right now we are at a 10-day range. So if we bring this up, we were already at a compressed 10-day range yesterday, but we have further compressed to, after adding today's session and dropping off one of these. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 now, and you can see how compressed it is. It's 46% of average range at just $2.99 of range. On a typical 5-day range, or rather 10-day range, you're getting about 5.89 points of range. So it's well below it, less than half, right? So again, we are very, very close. We are testing the 52s, but not really getting the breakout. You can see price is sitting right there inside the PIMA trigger zone, which has been flowing to the downside. And one last thing here, obviously we've been talking about an upside break and how this defending that zone could lead to strength. Right now, if price were to push and break through that zone, that would open up quite a bit of selling pressure. So again, not out of the woods here for bulls. It's still quite a struggle here as bears continue to defend this zone. Bulls haven't been doing enough to get it really going higher, but the early framework is there for a continuation if it can start to really get through those 50 250s, 52.25s, it could really open up the upside. So right now, watching to see how it plays out, but clear is the fact that we have a very, very narrow 10-day range here, and that 10-day range could open up quite a breakout. And you can see here at least 7+ points of range expansion that could be ahead for crude oil. All right, let's take a look here at gold futures. Gold right now trading 1580, 370, 1580, 340. You can see it's been range bound for quite a while. It's starting to make a little bit of a move higher though. The previous session closed higher. Now you're seeing a little bit of a hold off the previous session's mid and a continuation higher as well. And if it starts to push or stay above 1580 for long here, it has a likely target at the previous month's close price. Previous month's close price is 1593.40. 1593.40. And again, it's been a 2 days down to start, and it's been a slow move right back on up. So the expectation right now is if the price continues to hold 1580, we likely continue toward the 1593.40s either throughout the session or over the next couple of days. We likely get that target. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Please be sure to like, share, and subscribe. Have a fantastic weekend, and I'll see you in the trading room. Take care.